and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching. And Iran is reviewing a US peace proposal that would formally end the war while leaving key American demands that Iran suspend its nuclear program and reopen the Strait of Hormuz unresolved. US President Trump has said they want to make a deal. We've had very good talks over the last 24 hours, and it's very possible that we'll make a deal. President Trump has also subsequently claimed that Iran had agreed to his demand that they cannot have a nuclear weapon. The president paused a US military mission to reopen the strait to allow for negotiations to end the conflict, although the US has maintained a blockade on Iranian ships in the region. Elsewhere in the US, private payrolls increasing more than expected in April, rising by 109,000 jobs. And in the Eurozone, services activity contracted in April for the first time in almost a year, hit by weakening demand and deteriorating export business as the Middle East war weighed on consumer-facing sectors. US Treasury yields fell, along with oil prices plunging on reports of progress in the Middle East war. The US 2-year was at 3.86 at the 10-year, down to 4.35. Australian 3-year government bond yields fell to 4.59% and the 10-year down to 4.93%. And having a look at currencies this morning, we are seeing the Aussie at 72.4, and in fact it's hit a 4-year high of 72.7 this morning. The Japanese yen jumping to a more than 2-month high, with the Japanese government spending $35 billion over the past few days to halt the yen's slide against the dollar. Let's get more on the technicals with Zoran Kresovic from Blueberry Markets, who joins me now. And Zoran, what in your view is driving the risk-on rally on Wall Street?
Thanks for having me, Juliet. There's actually a number of reasons, but predominantly it's obviously the valuations and the earnings that have come through, over the past few days. And in fact, actually, if you have a look at the Magnificent Seven and the reporting of major biggest market movers or biggest stocks with a market cap in the US, we can actually see that it's been an exceptionalism story coming out of US, where 85% of the stocks have actually beaten the market expectations. And we can simply see that in a chart here on S&P 500, which has been absolutely flourishing and creating higher highs and higher lows, and it's broken through the major resistance level of around 7,000, and pretty much now we actually pampering it up and essentially expecting this to continue heading higher. Obviously the same is simple if you put it in simple terms, the same is applicable on the charts such as Nasdaq, where it's been outperforming as well. S&P now year to date has been 8%, or if you have a look at the lows since April, it's been around 14%. That just demonstrates a clear view that both retail and institutional money is long here. Any dip or pullback is an opportunity to load more and continue this trajectory that's probably likely to go for probably for unforeseeable future.
Yeah, it's certainly a strong rally. Meanwhile, what is also rallying is our dollar on the interest rate differential, and I noted a 4-year high, 72.7 this morning. What do you see next, Zoran?
Yeah, so in that one, Juliet, we've also probably got a better backdrop story coming through in around 30 minutes, where we got the trade surplus numbers that are due, which could potentially, support the Aussie if the net export figures are actually looking where, perhaps a little bit positive. We are expecting the numbers to come in a little bit lower in the month of March as opposed to month of February, but market Aussie is potentially front running at the moment and perceiving that as a positive note. So if you have a look at the Aussie right now, it's breaking through the major resistance level that I've been talking about for quite some time, or 72 cents. Money markets are obviously pricing another interest rate hike to come through later in the year, likely to happen maybe around August, September, with the potential of another rate hike coming into the year end. Obviously, we'll be watching the inflationary data quite closely to actually back up those numbers. But the fact that budget is coming out next week, the fact that obviously part of that budget we've got components such as minimal wage increase and number of other components which will support the economy, and the inflation probably likely to increase, then we could expect obviously RBA to continue the trajectory of hawkish hikes, and on the back of that we can expect Aussie to flourish a little bit higher. I will point one note here, Juliet, that it's not only Aussie against USD. If you actually have a look at the Aussie versus all the major crosses, or if you have a look at it against even Japanese yen as well, we can actually see that it's an absolute star performer right now in the market, and it's no wonder that we're seeing quite a lot of traders here at Blueberry where they're actually positioning themselves and taking full advantage of that right now.
Yeah, and interesting when you talk about the yen as well. I just note that the Nikkei has reached 62,000 in Tokyo for the first time ever. Let's talk about where Bitcoin is, because it's also breached a key resistance level. What happens next?
Yes, it's hard to bypass like a chart like Bitcoin at the moment, purely on such basis that we've actually seen this long consolidation of the chart. And like if you have a look at the long-term downtrend line, which I've spoken about a couple of weeks ago, it's clearly has been broken now. And this is a daily chart, and I put a lot more emphasis on a weekly and monthly chart, but nevertheless we can actually see a clear breakout that's actually happening at the moment. And the 81 to 82,000 might provide a bit of a cluster at the moment, because we are hovering around 200-day simple moving average. I think one point that we need to take into consideration here, Julia, is the fact that obviously we're seeing a positive correlation between Bitcoin and Nasdaq at the moment. And when you look at it in percentage terms, in general, we actually can see that Bitcoin has been somewhat lagging Nasdaq or US equities for around 30% or so since October 2025. Now, we do understand that Bitcoin and cryptos in general can be exceptionally volatile, and they can make up those numbers quite quickly. But what's more important is that we're seeing exponential amount of ETF inflows coming through in Bitcoin, which is obviously driving the demand. And there's quite a bit of short covering that's happening at the moment, where a lot of people are, and a lot of retail traders are actually unwinding their short trades and covering that with longs, because we actually can see the tide and the trend is actually changing here. So if you combine all these aspects at the moment, then it's hard to be bearish on Bitcoin or cryptos or in general. And if anything, I'm probably looking for an entry around that $80,000 mark. If we actually break those levels, then there's no reason for crypto to continue heading higher. I don't see it as a backdrop and digital gold currency at the moment, purely on the basis that it hasn't been supporting the move right now. But if the risk on sentiment continues to prevail, then it's only natural to think that Bitcoin will likely to continue heading higher, and perhaps maybe we might even see a challenging the psychological level of 100,000 soon.
Ooh. Let's wait and see. Zoran, thank you as always. Zoran Kresovic from Blueberry Markets. That does it for this edition of The Trade. Be sure to join us next time.